Let me welcome in Trevor Williams. He's Chief Economist at the Lloyds Bank Wholesale Banking Division, joining us from London. Trevor, good morning. Thanks so much for joining us. Just straight off the question that everybody's asking this time, QE3, do you think we'll get something? And also, what would be the nature of this QE3? I mean, are we talking about government securities, mortgage-backed securities, a mix of both? What is the realm of conversation in dealing rooms right now?
Well, first of all, I think there will be some QE3. The non-farm payrolls were weak enough to justify it. I think it'll be a combination of government bonds and mortgage-backed securities. It does look as if the talk is they'll broaden the range in order to stimulate an already recovering housing market and help boost it. There are clear signs that the turn has occurred in the U.S. housing sector, which is one of the key impediments holding back that economy. So giving it a boost at this point may be something that they'll decide to do.
Trevor, just sort of wondering then, I mean, just purely economically speaking, in your assessment, do you think there is enough reason for them to actually pull the trigger on this?
Yes, I do. I think that the economy of 1.5% to 2% doesn't appear strong enough for them. The Fed has a full employment mandate. The employment growth on average for the last year has been 150,000. In the last few months, it's fallen to about 100,000. So in their eyes, they can do a bit more to boost it. So I think they will.
There have been other things talked about, Trevor, such as this has been indicated quite clearly by the Fed chief that they would perhaps extend that low interest rate guidance well into 2015 now. That, if anything, just provides a bit more clarity to the market?
Yes, I think, the other thing is the language around rates probably will extend it from late or mid-2014 into mid to late 2015 in order to ensure that everyone understands that they are determined to keep policy loose for as long as it takes to get the economy going. So they'll embed expectations of low interest rates for even longer.
Just wondering, Trevor, before I move on to news in Europe and in China, but from what you pick up from your market colleagues, do you think something like this is already built in right now, or do you think, this would be an incremental positive, both say for the euro and then also for the equity markets?
Is the expectation of that built in? I think it probably is built in. I think that the view is the Fed is determined to boost the economy further because they feel that it's justified. And to the extent that they do that, I'm not sure we weaken the dollar any further. I think that's already priced in. I think that the expectation to cause any change now will have to come from the Eurozone side.
Got that. Just the last question, Trevor, wondering what you've been making of what's happening in China. A bunch of data out over the last 24 hours or so suggesting weakness, but then you also had that news suggesting that they've got a fairly large stimulus-like pipeline on the investment end coming up.
Yes, I think that the Chinese economy is definitely slowed sufficiently for them to think about a stimulus. I think the problem is they're wondering what kind of stimulus. Should they do an investment one, or should they try to do something which boosts consumer spending? And they seem to be torn between the two views. I suspect that there will be a combination. I think that further airport building, which is something that they do need, is necessary. I'm not sure they need more bridges or anything like that. But almost certainly it looks as if they will announce some sort of policy initiative.
All right, Trevor, leaving it at that. Thank you so much. Appreciate you taking the time. Have a good day ahead. That's Trevor Williams with his thoughts.
India's #1 news app. Just got even better. Download NDTV's new app. Fully optimized for Retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.